Hello. As I talked about in my last video, that we have just go through a 40-year boom economic cycle, and now we are transitioning to another maybe 30, 40-year old relatively depressed economic cycle. I feel it is very important that we talk about a little bit about the economy in addition to the war in Ukraine. So today I'm going to talk about some of the biggest influential people, their idea, their thinking, and also about Goldman Sachs, JP Morgan, and Bridgewater, how they think about the investment. And some of the idea may be very helpful to you. So that's the purpose of video, basically trying to give you some information about the basic economy and how the thing is going on, why they are going on. I will continue put out several video about like a crypto investment, NFT, um, the stock market, the contrarian like a methodology. Basically, is that the Wall Street operate very different from the individual investor. There are, roughly speaking, is very opposite of what an individual investor is thinking. Like when they Wall Street is buying, and it's only when they saw the retail investor feel panic. So where the retail investor feel euphoria, and that's when the Wall Street is sell the stock. So there is exactly opposite methodology when they come to the investment. So it is very important that anyone who invests either in housing market, stock market, you have to understand how they professional operate. So that's I will gradually have a topic on each of the thing I was talking, and now today we are just have a very kind of overview about the general economic picture and why we are in a transaction period from 40-year of boom period to like a 40-year of relatively depressed economy. So let's start it. First, this video is about like Jeremy Powell talk about the increase in inflation of 70 point base point, basically 0.75%. This is very significant. Part of the big increase is because of the big inflation coming to the United States. I will explain that in the next few video. But first, let's review some of the biggest leader in the economy and the investment space. Like Aaron is the one of the leading bond investor. Bond investment is needed to have a great understanding on the macro economy, basically the big economy and the big interest rate and the inflation. So he is saying the United States and the Fed, Powell is lag behind the curve. Basically, I will explain why that is the case. So this is another leading economist. He is saying like Lawrence Summers used to be the best professor in economics at Harvard, and he was also the U.S. Treasury Secretary and I think under Obama. So he also think that the economic decision on the inflation is pretty bad, and the it is very likely the interest rate can go much higher than this. Um, so this is one of the things I will also explain a little bit later. So this is the investment strategist of Bridgewater. She's talk about the
CIO of sustainability at Bridgewater Associates. She joins us now, and she's one of Bridgewater's foremost experts on macroeconomics and FX markets. Karen, the way Mohamed Al-Arian was talking about it, this was a seminal moment. This is a huge game changer for the ECB and then for central banks. And I'm wondering if you believe that we can actually get to 2% inflation.
Hi, great to be here. I don't think with the amount of tightening that is currently priced in, we can get to 2% inflation. And so markets are starting to process the tightening is going to.
So what she is saying is that what the Fed has already done are far from enough. So there will be some more tightening on the economic cycle. So let's also go to the economic cycle. Why we say the last 40 years is a boom cycle. Now we are transitioning into a depressed cycle. So economy basically is always running in a cycle. There is a boom and bust period. Going up is boom period. Going down is the bust period. The major reason is that when going up, like a business earn more money, they will increase the investment. So you will see positive feedback loop. So economy will be pour forward and increase pretty fast. But once it reach a certain level where the debt level is very high, and the company can no longer borrow a lot of money, and also some business will start decrease the investment. So you will see the productivity decrease. So once the economy, some sector of economy become not so good, and that sector will also drag other sector going down. So you will see a depressed economic cycle, and this will continue going on. Basically, during the depressed economic cycle, the low efficient company will go bankrupt, and the productivity will increase. So that's when sometime it will reach a bottom, and then the economy will go to another positive cycle. So what we are having now is right at the peak, or maybe already past the peak. So that's what we are right now. Let's explain a little bit more. So the economic cycle have several major players into the picture. One of the dominant factor is the interest rate and the Fed rate. So the federal rate is how much interest you'll get from the government. They guarantee the interest rate. And the inflation, I think everybody know that. I'm not going to talk about that. So let's see the general picture in the history of the United States. So from here, we can see in the 1981 to 82, the United States inflation hit the very high, and the Fed rate also reached a peak. It's roughly 18% to 20%. So why the interest is such high level? Well, I will continue to talk about this time and also in the near future. But when you compare the interest that we had right now, the Fed interest rate is about 0, right? And versus the 18 and 19%, that's a huge difference. So the reason we have the 40-year economic cycle is from 1982, the interest rate hit very 18%. Let's take it 18%, and go down to 0. So during the process of decrease the interest rate, everything became like an investment. The borrow cost continue to decrease. That will incentivize and make the borrower of money easier, right? So that basically make the cost of business lower. That's why the economy in the long term keep going down. Another thing which I will have a separate topic talk about is that when your interest going down, the housing price will inevitably going up. There may be a little bit lag, but it was certain going up. Generally, interest rate going down 1%, housing price should at least go up 15%. The reason I say at least is that this does not include in the government print more cash. If the government print more cash, then that should be higher than 15%. So vice versa, right? When we in the next 40 years, when the interest rate is going up, the price of the house also should going down. That's almost 100% that the housing price is going to drop. And if you don't believe in that, wait for my next video. I will give you more detail on that. But in the meantime, when for example, the interest going down, the housing price increase, the housing will also need a refrigerator, electronic, home appliance, furniture, right? So people will buy many commodity along with the home. So when the housing market have a boom cycle, it will also promote the economy in general. That's why we have the 40-year very positive economic cycle in general. There are some recession, but in general are very brief. Think about if you look at the picture here, you see that whenever there's the settle period, here is a recession period. So when the interest going up too high, it will cause a recession. So during the recession, the government will decrease the interest rate, basically decrease the cost for investment. So that will lead the economy to recover and continue to grow. So whenever there is a recession, the government will decrease the interest rate here and here and here, right? Every time there is a recession, the government feel pressure and they need to decrease the cost of business investment. So what we're going to see in the future is another topic I will talk later, but today we are only focused on the inflation and the interest rate. The reason they increase the interest rate in general is because of inflation. Because when inflation too high, businesses also don't have an incentive to invest, right? If you invest and your profit maybe 10% and the inflation is 18%, you still lose money, right? So nobody will invest. So the reason government want to control inflation is mainly to make commercial environment good for the business. So whenever the inflation going up, mean you have more supply of cash or money than the good. You need to increase the interest rate so that the cost of business activity and borrow and spending will going up. That will depress the consumption. So there is. So this one is the Fed interest rate. And let's see another picture where we have. Oh, this is mean current interest rate. It's about 8.5%. It's very high when you look at the other people. Let's see. This is the picture where it tells the real interest rate and also the core inflation. The real interest rate is the nominal interest rate subtracted by the core inflation. So you have so the real inflation, the nominal inflation is what most people say is a combination of these two lines. So in 1980, the inflation you can think about here is almost around 10%, right? There is about 10%. So we are 8.5%. It's very close right now, like close to the level of 1980, the peak period. So this is, see, the red line is the core inflation, right? The inflation at the time is over 12%. Now this picture saying it's about 6 point, but actually this one was the older one. It should be about like 8.5%. It's about here. So this one should extend to 8.5%. So that is very close to the line of the 1980. And the Fed rate is like how much money you put in there and whether the purchase power will increase and decrease. If the blue line is below this zero line, that means you put money there, you will lost purchase power. If the line is above it, then you put money into the bank, and next few weeks or few months, the purchase power increase. So generally, in order to control inflation, you want the real purchase power to be above the zero line. Basically, is that when people put money in the bank, they get more money than the inflation. That is what is needed to control the inflation. So you can see that after 1980, most of the time the blue line is above the zero. Right now, it's very terrible. Think about it. Like if you put like $100 into the bank, 1 year later, you lost about 6%, right? Because the real purchase power, the interest rate is far lower than the inflation, right? So if you put 100, you lost 6%. That's terrible, right? So that's why the interest rate of the Fed has increased almost 0.75. It will continue increase throughout the year to about 3 to 4%. So that will bring the negative interest rate about 2%. That is still low, will cause some inflation, but because of the war in Ukraine, that may be the war. If the war is temporary, then that may be enough. So that is a basic picture about the inflation. So in the meantime, because every one of the Wall Street professionals, they are negative about the stock, you can assume many of them shorted the stock, including Bridgewater, Goldman Sachs. So that's why, like after the announcement of the interest rate hike and also inflation, the stock market has a rot, right? Because the big guy are shorting, and also many of the big investors are withdraw money and they sell the stock and withdraw money. But in the meantime, usually the hot stock are leading the market. Means that the hot stock usually drop faster than average stock. So because of all the negative information from Wall Street and Wall Street professional investor, some of the stock is in a very terrible, dirty, cheap situation. But I need to warn you that even though it is very, very cheap, it can still have the potential to be cheaper because economy are far from reach the worst shape. The economy will be much worse than right now. But at least myself, I already buy a little, maybe like 1/3 of my cash in some of the stock. The reason is that you never know it's really difficult to time in the market because some stock drop very fast. They can be already reached the bottom or very close to the bottom. But even if they reach the bottom, they can be much cheaper because they need an investor. They want to even push their stock even lower. So I just warn you that do not just buy it. They do some research, make your own judgment. Don't listen to what I said or even any other side. You should have your own opinion and make your own decision. But I just give you some information and they yeah let's give you three suggestions. One of the suggestions is called Novavax. This one make a protein like a protein vaccine for COVID-19. This company at the peak has about like 300 per share. Now they are about 40. They Actually, right now it's their best shape in the last 4 or 5 years. The reason is that their vaccine just been accepted by European Union and many of the like Japan, New Zealand, Australia. They have about 40 countries accepted uh, to use this vaccine. The vaccine is protein is not the RNA. RNA vaccine manipulated the genetic print, so it's relatively more risky. The protein vaccine is more traditional, many of the popular vaccine are use protein to make the risk of causing cancer is much lower, like maybe 100 times lower than the RNA vaccine. Even though some people do not see the cancer, but it really nobody knows. Maybe 10 years later there will be a problem. So relatively speaking, their vaccine is very safe and also very effective, roughly the same as Moderna and Pfizer vaccine. So, but their management made several mistakes, and their current problem is pretty big. But their stock value, it's much lower than the market value is. I think it's about this current year, their revenue is about $4.5 billion. Their market value is about $3 billion. So you think about the leading vaccine maker is like the forward earning is about 2%. So generally, average on the market is about 14, 15 level. This one is only 2. So, but do some more research. What I know is also limited, so you need to do your own research. Another one is Block. Block is Twitter CEO. He used to be Twitter CEO. Now he's only dedicated to manage the Block. It used to be called Square. That's why this is SQ. So this company, my suggestion is that what's good about this company, not only because the stock level is 5 years low, almost the lowest in 5 years. Another reason is that this company grow very fast. Even such a big size, every year it will almost double. This one is about 50-60%. This one is double, and this also double. And now we are less than 6 months, right? Their revenue already reached last year level. So we can assume this year is also probably double. They are in e-commerce sector, and the CEO is very smart and very good. This is high growth in a hot like a payment sector. So this is another one I would recommend. but you again, you needed to do your own research. This, I think, compared to all the other big stock, this one I think is the most attractive, in my personal opinion. Think about a bigger company like a $33 billion company and grow such a like a double every year. That's incredible, right? So not even Amazon can double, right? This is an incredible company. Another one is Coinbase. Coinbase, after they go to IPO, the company actually, the value of each stock surpasses $333. Now they dropped to about $50. Many people, like including Bill Gates, say, "Oh, NFT are completely 100% scam, right? The crypto have no inherent value." This is true. No crypto have inherent value. It only have exchange value. But I think people underestimated the crypto. Crypto, for the Coinbase right now is 13 billion. Coinbase use a very untraditional way to go to IPO. They basically did not go through Wall Street firm to sell for them. They sell directly, and they don't have a lock period. That means that when when the Coinbase stock go to IPO, the employee and the owner and also the company can continue to sell the stock at a very high price, right? So that means their employee and the owner of the company and the investor and the company's pocket is very good. In fact, they have a lot of cash. So because once you have money like Apple, right, you can invest and continue leading the play in the crypto space. So this company actually, it has potential to be very good. I think this is maybe, but I need to warn you, right? The blockchain, especially like Bitcoin, has been dropping for a very long time, like 2 or 3 months. It's terrible. Like it used to be 65,000 US dollar per Bitcoin. Now it's only like 18, 19,000. So it's about 1/3. It could go much lower, like maybe another half. So the risk of this stock is very high. But this company has potential to do very well. We don't know in general. So this one, in relative to the other two, I recommend this one probably is more risky, and that's my personal opinion. Okay, still doing your research, and let's finish today about the economy and the macro economy. Next few week, I will talk about have a separate topic about crypto, NFT, general investment, macro economy, housing market. The Wall Street controlling investment strategy. So, but in general, I will let's talk about my own view, then talk about the leader of the Wall Street, so that from my channel you can. You don't need to spend a lot of time, because I already spent time to read those other people's opinion. I will do a summarize or kind of digest for you. So hopefully that will benefit you. All right. Thanks now. Bye.